Good morning and welcome to the Early Bird, and here we're looking at the Dow Jones as a CFD and 1 hour chart, and we're looking at this pattern here being corrective, and we're considering it a wave 4, and then once it's finished then we consider down for 10,000 thereabouts. Now, in coming down for 10,000, if the wave count is correct so far, if wave 4 is complete in terms of an A and a B and a C wave at this stage, and that's highly probable, then we would look at this as being down for wave 1. And that does seem the case because of the actual wave structure coming down here. You can see the nice powerful third wave in through here, and yeah, the fourth and the fifth here, but that third wave there really sort of clinches it. So we're looking at this wave coming back as a wave 2, and it does appear corrective, but it's not that it could be either way. However, we were looking for the 11.3 as a top here, or running into the supply here as we were talking about. The S&P 500 had a little gap there on the cash market around the 11.90. That got filled and then the market turned on that. We feel that this move up here is based on the Fed speech tonight in terms of more stimulus, but we feel that that speech is already priced in as the wave 2 there. Could certainly be wrong. We could see some sort of rally into this sort of area here, but as it stands at the moment, the sharp fall that we had last night at 1.5%, it does, and we'll have a look at this in a moment, it just looks small here, but it does appear that it's got a 5-wave structure coming to the downside. So we would see this as down for wave 1, back for wave 2, and wave 3 here is always longer than wave 1 here. In fact, we could look at that at 1.618, but we will use the levels and yeah, so the important numbers here, of course, from 10,000 to 11,500 would be the 10,800, as you can see here, and 10,500 here. 5 the second strongest number, 8 the third strongest number, and 1 the strongest number. Sure, 11,000 comes into play and all the rest of it, but anyway, let's see how this progresses through here. And on our local market, the ASX 200, the 4,200 is the line in the sand. So being long or being short in the market, with the price being above or below that, is kind of what you would be looking at as a bit of an edge there. And also you'd be looking at BHP in the US being above 80, and it's not. The only thing supporting the situation for the resource sector is but the base metals, and that's sort of who we are in a sense, and they are in a strong position. But I do feel that their situation is their rally up is just that, a rally, and we'll look at that. But it is a supporting factor, and when it comes to trading, analysis and theory are fine, but when there's money on the table, you need to trade what you see, and we use support and resistance for that. So that's what we'll be using again. But let's have a closer look into this. Maybe I'll just have a look on the S&P 500. I've got it here. Okay, this is on a 5-minute chart for the S&P 500, same as the Dow, same as our ASX 200, much the same as the European markets. But I do feel the European markets are just a little bit ahead of sort of leading the way a little bit. But essentially we're looking at this here as 5 waves down in terms of down for 1 here, back for 2, down for 3, back for 4, and down for 5 here. This also can be counted as 5 waves down to this point here with an A and a B and a C here. But, you know, it doesn't really matter. I can see that this is corrective in nature here. So whichever way you look at it, we should see further downside here. For the S&P 500, though, we would be looking at subgroup 2, which is important, which would be the 65, 72, and the 80 here. So those 3 numbers there, those 3 levels make up subgroup 2. And what we can see here is the price is firmly under that. It's retesting it here, had a second retest. So it's sort of locked under there now. So this will deal with the midpoint, the 11,150. But as we see the Dow going down to 10,000, we'd see this down at 1,000 as well. Now the S&P 500 here, the Australian dollar will be following this market here, and also the euro would be following this market as well. So we're seeing a strong US dollar, we're seeing a weak euro, and we're seeing a weak Australian dollar. And the Australian dollar is a commodity dollar, as you know, so it's sort of resource based, but it's got a lot of influence because of it's a way to trade China through a stable environment, our market. So it has a lot of offshore money coming into it, and that's why the relationship there is with the S&P 500. And of course, we follow Hong Kong as well, and they're all linked together. They're all in the same big wobble, so to speak, but this important move down through here does appear to be an impulse wave, and the point being is that it gives direction, and we'll be seeing more of that. It's the same with the UK market as well, the same sort of pattern through here as well. And what makes me feel that it's strong to the downside is simply because of this structure here, this three-wave structure. There's no doubt about that is a corrective pattern. Sure, there could be possibilities of other patterns occurring, and I was going to talk about them yesterday when I sort of lost the video. I think I made the video too big. But, we could see a triangle pattern here as well, because wave fours have the complicated patterns, corrective patterns in them. In Elliott, there's 12 corrections. That's debatable, but having this three-wave structure here certainly opens the door up for being a large triangle here, or even a larger flat correction in terms of an A, a B down to here, and then a C back up, and then down. Whichever way it is, the markets are in a bear market. So when it comes to sort of dealing with portfolios and larger things, you need to be on the right side. And this is an impulse wave coming down. So it's telling you, giving you the direction of the market. This is giving you a corrective pattern, saying to you that it is corrective. It is a continuation pattern. So once this is finished, we will continue in the direction of the trend, which is obviously down in this case here. So make no mistakes about that. But as we see it now, we're got 5 waves down here for wave 1, and then we've got this sort of scruffy overlapping structure for wave 2 here. That was also pretty close to the 61.8% mark, but I like to use the psychology of price, what numbers people think of, and also where the volume is sitting as well. But this does appear to be 5 waves down through here now, so we'll see that move down further. So as you can see here, we've got down for 1, back for 2, and it's just the third wave down here that makes it look, that gives it its credibility as being a third wave, and the fourth and the fifth here. So we'll see wave 1 bounce off this trend line or thereabouts, put in the sub levels through here and work them, and there should be 5 waves in that last little fifth wave there. Then we should see a counter trend. It will be sticking to this level here a lot. If it leaves here, then it's really got to go all the way back up there, because there's no volume in here as such. And a lot of these things here are normally stops being taken out, and the computer tripping stops out. So, but anyway, it's likely to stick in this subgroup 1 here to 51.30, and then move down from that. But it's going to be a bouncy ride at the 5,000 here. Same with our markets as well, but obviously a little bit different. This is what's occurred over last night. You can see that it was the same pattern as the S&P 500. When markets are in fear, they all move together in that case. This is 4,200 here, and as we've mentioned a few times, this is the line in the sand, and this as support or resistance is the telling story of having longs or shorts in the market. Now we're under the level, of course, here, but we haven't sort of retested it, so there's a couple of ways to look at this. I've just put this down here as 5 waves to here, but that could be 5 waves to there. I haven't pulled it apart on a 2-minute chart yet. But either down for 1, an A and a B and a C, back for 2, and then working lower through here. But look, I just expect some sort of retest in through here, so we can just expect that. And but traders need to be on the right side of 72 here. But I also wanted to point out this is the bigger picture here on a sort of what's got 4-minute chart here. But what I wanted to do here is that just have a look at the volume here. Probably a bit sort of excessive here, but what I wanted to point out is just to show you that the pricing above here, like in this move going up through here, you know, we've got sort of that lower volume there, and as that's going through here, we've got sort of lower volume through here, and as it's coming down here, we've got that definite sort of increase in volume through here and through here. So in this retest here, yes, there is a lot of volume here, but it's it's less than this volume here. Do you know what I mean? So this is less than that on the retest there. So that's a real sign of weakness there, and it's got to be looked at as weak. So anyway, we'll see how we go with that. The supporting factors are the US dollar here moving to the upside. Now, while this is moving up, it's going to create weakness in stock and other markets as well. So what we're looking for here is we're considering this to be the low here, and up for wave 1, an A and a B and a C wave for wave 2, and then up for 1 here, or up for 1 here and back for 2 here, and then it's starting up for 1 and back for 2. So it's starting to work to the upside now. So it has got this sort of pattern that we're working from on the lows here. So you can lift your stops if you're in this market. You can lift your stops from this low here now up into here, because any move back down through here would be taking that out. But there's still a fair bit of building to go, so don't bring the stop up above here. If you're worried about the risk that you have in the market, well, then you've got too much in and take some out, or certainly take some out at certain numbers. But the more that this builds support on top of group 1, 74, 10, 20 and 30, you're looking for support on that 30 there. If you can find it, then we'll push up through the midpoint and continue up there. But a strong continuation up there obviously is going to push the euro down, and we'll look at that in a moment. But I also brought this up first because of the gold market as well. So when we're looking at the gold market here, as you know, it's been all over the telly. So we're looking at our 5-wave structure coming down here for the A wave, and then we're looking for a retest of here. Normally it's a 61.8%, and it could certainly do that as well in terms of rallying to the 61.8%. But a couple of things first. The 1772 here will play a part in this here, and also the 1800 here will play a part as well. But be aware that the 61.8 retracement levels up here. So as normal, this is 18, and this would be a retest of the closest largest number, but also 10, 20 and 30 on top of group 1 here, subgroup 1. If the price found support on top of subgroup 1, then we'll be going to the upside there. So essentially we can allow for this market to come all the way up here to the 61.8% mark, but we'll see how it goes. We should be looking in a 3-wave structure to the upside as such, an ABC to the structure. And once that's complete up there, then we will be seeing more downside, because this 5-wave structure here will give us more downside there. It's probably a bit clearer on the silver market. If I can just bring that up for a moment. Silver market here. So yeah, so we've got 1, 2, 3, 4, 5 down for wave 1. Then we've got wave 3 down to here, wave 4 and wave 5. So we'll be looking for a 61-point retracement level there, but you can see that will come in at 42 there because of this supply structure here. So we won't see it go much past that, but it does appear to have 5 waves going up through here. So we'll see 5 up here, 3 back, and then a 5 up again, and then down from that point there. The oil market, the other driver there, is following stock. But it seems it's moved higher than stock and it's a bit more buoyant. I've only got it on a 2-minute chart here, but just wanted to point at that really sharp move down through here, and more of a corrective move to the upside there. But as always, the 85 here is the line in the sand, and we need to see how that that plays out in the bigger picture there. So Let's just see here. So, okay, so basically it's the same sort of structure in everything else. We've got 5 waves down from 100. We've gone through the bounce. We were looking at a retest of 90. The 88's a profit-taking number. Then we've seen 5 waves down like we have in stock, and then we're looking for an A and a B and a C back up to the 85 or the 86.50, the little sub point there. And it does seem to be showing weakness now, but I just also wanted to point out too, it's in its nature to have these sharp drops through here, as you can see through here. So we need to consider that as well and trade what we see. So we don't see this at the 85 as resistance yet. We do see that this is a part of the process, but we haven't seen it locked under here and move down through here just yet. So keep an eye on that. And so oil stocks wouldn't be the one to, the energy stocks wouldn't be the ones to short at this point in time until we've had that locked in there. But just keep an eye on that, and that can be the line in the sand. Now, where the strength is coming from in the local market will be coming from copper, and I'm looking at this in terms of this whole pattern still is a corrective pattern through here, but now we have to consider this coming back up to the original, because it just never left here in the first place. But it's interesting that it's moving now. I was wondering if the Chinese were buying from the spot market because they'd been holding off there. I don't know the story, but the move up here, we need to count 5 waves up. So that's what we'll do in terms of getting a bit closer to this. So we're looking at this now in terms of an A wave to here. So I'll just go an A and a B and a C wave for the A wave, then an A and a B and a C for the B wave, and then we're looking for 5 waves up. So in that 5 waves up there, if I can just point that out a bit while we're here. So the way I was sort of looking at it is that this being up for wave 1 here, then an A and a B and a C for wave 2 to here. So that's wave 2 in brackets. Okay, so then we've got 5. We've got to go from wave 2 up to wave 3. So wave 3 would be in this brackets here, but there will be 5 waves in the third wave. So what we're looking at here is we're looking at up for 1 here, an A and a B and a C for wave 2, and then we're going into the third wave, and the third wave will be up for 1 and back for 2, and we're still in the third wave. We'll go up for 1 and back for 2, and we'll go all the way up for the third wave up to here, 4th and a 5 up for 3. We've got to finish that third wave, then we'll have the 4th, and then we'll go up for the 5th here of the third wave, then we'll have the 4th wave, and then we'll have the 5th wave. So that's kind of what we're looking at there in that terms, and that means that nickel, zinc and aluminium and so forth will be pretty much in the same sort of path. So if you wanted to trade this, you're better off trading this in terms of this market rather than chasing stock on our local market, because the indices will be pulling our stock down, and the proof in the pudding there is BHP in the US was down 1.7% and not up based on base metals or gold there. Or I mean, BHP is widely spread, so it's a good indicator of what's going to occur there. Coming on to the euro here. We were considering the 144 here as the line in the sand, but we also understood that the pattern that was being created up here was a sort of a topping pattern in terms of down for 1, an A and a B and a C for 2, and then down for 1 and an A and a B and a C for 2, and then the same situation here, just smaller, and then down for the third. So we'll consider this either down for the 3rd, 4th, and down for the 5th, or we'll see it retest up there first. But either way, when that sharp move that's come down through here overnight is an impulse wave, and we would see this as a corrective wave coming back up here. So we'd see it in terms of an A and a B and a C wave retesting the 144 here. So if you're going to play this market here, which I think the best moves are going to be coming from the US dollar and the euro now, and so looking to have a failed retest at 144. If that is the case, and we find this subgroup 2 here as resistance, the 65, 72 and the 80, then we want to be coming further to the downside. And I feel that this could be a really good trade, and a long term trade to the downside. I won't bring up the bigger picture now, but we need to start considering that, and yeah, we'll look at that much closer. The Australian dollar is following the S&P 500 and the other markets as well. So just looking at the bigger picture here. So we've come down to the $1 here. We've had our bounce back up through here. This move is corrective and it's moved back up here as a wave 4. Sure, it's moved up high like our Australian market and the Shanghai, etc. But we need to, even though it's high, we need to line it up with the rest of the world. And that's what we've sort of done. It hasn't really sort of broken any rules, so we'll play it as that. This is a 4-hour chart, so that top being in place at the 106 there. So we've come down for wave 1 and we've come back for wave 2, just like it's in stock. And now we're looking for this to move further down, and that's been the case. Even though this has been a bit messy in here, it's still being edged down in these lower highs here and moving down. So we're looking for that 5-wave structure down, and we'd be looking for a move coming under this here. Now, this correction here in terms of an A and a B and a C, now that's fine, and we can come down for 1 and back for 2, down for 3 and back for 4 and down for 5. But we also got to consider, if this is a wave 4 here, this can still get much more complicated. So we could end up with a big triangle pattern on the $1 here as such. So we could have, this correction here could just be one leg. So like an A wave and then an A and a B and a C wave for the B and then a C wave and then down. So it could get rather complicated. And the reason I say that for is because of being around the $1 here, because the $1 acts like a magnet, and if the market's above here, then it will allow it to go up like a lucky band and then pull it back down, and if it shoots down below it, then it will pull it back up. So we've got to go through that sort of whole process, so just be a bit aware of that. But at the same time, we expect this to scoot along quite quickly now. If we're going to come down for wave 3, should move quickly and follow the S&P 500 and our local market there on that. And this is it here in terms of its structure there. The 105 has been our main point of contention there. I was kind of considering this here, down for 1, an A and a B and a C wave for wave 2, and then we need to find the 5 waves in here, and then a reach down for 1, back for 2, down for 3, and so forth. But as you can see, it's still quite messy, but what you see when it's messy like that is not what you're going to continually get. You always get the opposite of what you're sort of looking at. So because this has been sort of messy, it's been preparing for the downside. We'll see how we go, but it's still going to be messy in terms of here. So 104 being a whole number, then 10, 20, and 30. So you can see this is all like group 1 here. So it is going to be rough through here. So just be a bit careful about that, but you want that 104 as the resistance and then trade down to the 103. Okay, that's it really. Yep, I think that sort of covers it. So just going back to the S&P 500 here, I think I might even just have a look at the US 30 because most people are familiar with that. So just bear with me a second here. We'll just sort of go over this a little bit. So this is what we're looking for from this high here. We're looking for down for 1, back for 2. The Fed's speech, Ben's speech, should kick back and retest somewhere up in here, and then after that would a deflation of that and see that third wave come down. So we really want to have some shorts in the market, but putting some shorts in the market today may see a rally into that into the 11.3 here again, so we could get sort of stopped out. So my suggestion is that, look, if we do go short, let's just use less money and in position sizing, and then we can look to add to this on the Monday morning, or if you want to use the indices overnight, then that's fine as well. But there's just that little hiccup that we've got to get through there. So having the stops too close could get us into a little bit of strife there. So if we kind of consider something like this, for instance, if we'd consider something down like that, if I come into here, just grab the multi-tool here. So if we look at this situation here, that's the first sort of structure that we'd be sort of looking at. So we want to get this, of course, but we've got this little guy here that's going to give us the doozy here. So we need to sort of accommodate that. So we need to find stocks that are already from yesterday closing down on the closing price being lower than the opening price, and also increased volume as well, and then you won't get so much of a kickback. Anyway, we'll look at that. Alrighty, good morning and good luck, and have a good weekend.